All right. Back to work tonight, Tuesday evening, September the 22nd, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me, because my job tonight is to help us find the best entry setups for tomorrow. That's Wednesday's trading session, and I got a jam-packed video in store for you guys and gals tonight. The charts are all prepped up in the background, as you can see. Got the oil, got the gold, and of course, how could I forget, got those big E-minis on our radar for tomorrow. Speaking of radar for tomorrow, got some big, strong moves, some failed rotations, got a lot of really great setups we're tracking for tomorrow. That's Wednesday's trading session. Before we jump in, though, and get our hands dirty on these charts tonight, though, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. That way you don't miss all the good stuff we publish every evening on this video. And don't forget, if you have any questions, drop those questions in the comment section below. And if you love the content we publish every evening on this newsletter, always appreciate you guys hitting that thumbs up button for me. So don't forget to subscribe. That way you guys get all the good stuff every week. Drop those questions in the comment section below. And if you're like me and you rely on this video to get your mind right and those charts right, how about a thumbs up for me here tonight on this nightly newsletter? But enough of the intro. Let's get this video going. Time is ticking. I'm a little bit behind schedule. Let's get this video started with the calendar for tomorrow, courtesy of Econo Day. Tomorrow, of course, is a Wednesday trading session, middle of the week. Now, before we jump into the specific news tomorrow trading session, I do want to remind you, right, we are in that kind of, like I mentioned last night, we're not the third week of the month, right? OPEX and quad witching last week. We're not at the end of the month yet. We're kind of in this kind of in-between right now, right? The second and the fourth week of the month are usually pretty typical, right? The first and the third week of the month are usually pretty darn busy. We saw that, of course, right, last week with quad witching. Here we are now, the fourth week of the month. So we are expecting there to be a little bit of a, dare I say, lull in the craziness, right? We are going into an election about 45 days from now. So it won't be that big of a lull in the craziness. Markets will definitely, we anticipate to continue, right, some pretty good volatility. And from what I'm seeing the charts tonight, I get some really nice setups I'm tracking for tomorrow. But be aware, right, this week is anticipated to be a little bit lower volume, a little bit lower volatility. It's a little bit of a break from the craziness that we usually get at the beginning and the end of the month, right? But it won't be too long of a break, though, right? Next week, of course, is the end of September, so we'll be right back to fever pitching as far as volatility goes. Don't you worry, right? That'll be coming back here next week. So fourth week of the month, no longer quad witching. It's not the end of the month. We definitely expect there to be a little bit of a, not a sleepiness, but a little bit of a lull in the price action here this week. And then what definitely has been something on our radar this week, as we mentioned last night, is we have three, and I'll tell you right now, I can't think of the last time we saw Jerome Powell speaking three times at three different locations, right? We had the House Oversight Committee today. Tomorrow we have the Coronavirus Crisis Committee, right? Tomorrow on Wednesday. And of course on Thursday is the big one, right? Thursday is the Senate Banking Committee. Now obviously we're right, we made it through Tuesday, right? Barely for some of us, right? We made it through Tuesday. So now we're looking at Wednesday, right? So as we look at the calendar for tomorrow, where's the big news for tomorrow? The big news for tomorrow is right there, right in the middle, that PMI composite flash at 9:45. Anytime I see PMI, CPI, right, and anytime I have an I really, right, at the end, PPI, PMI, CMI, all of these indexes, they deal with inflation, right? That means currencies. That means gold. It pretty much means all the markets are susceptible to some pretty big moves here tomorrow. Now, 9:45 is interesting tomorrow because just a few minutes later, we've got Jerome Powell speaking. Now, we saw today how sluggish the market will get, right, when he hits the microphone. Usually the first time he speaks every couple months, he'll do this kind of tour, right, where it goes in front of all of these committees. Usually it's only 2 different committees. Usually it's not 3 in 1 week. This is a pretty extreme situation. It's because tomorrow I think they're putting him in there with that coronavirus crisis committee tomorrow. The bottom line though is today we saw how sluggish the market could get when he starts speaking. Usually the first time he speaks in this kind of tour he does, right, every few months, usually the first time he does it is the worst. So tomorrow, we definitely have him back on the microphone at 10 o'clock Eastern time. He'll be in front of the coronavirus crisis committee. I'm not joking about that. That is the actual name of the committee there. But the bottom line is, I do anticipate that to be the least of all of the impacted speeches this week, right? So again, it's the second one this week, so it's probably not going to have as much staying power as when we saw here today. The coronavirus committee definitely not as, I wouldn't say it's not as important, but it's just not as high profile as the oversight committee, which was today, and the banking committee, which will be on Thursday. So I'll tell you right now, if there's one day tomorrow where we may not get as big of an impact, because whenever he starts speaking, usually things will slow down. Tomorrow's definitely a day where I would anticipate that to be the lightest, right, of the week here this week. And that's really good news because we had that PMI number at 945. Now, obviously, I'm speculating right now, so we'll be ready to go right at 10 o'clock Eastern time tomorrow, being very much aware that Jerome Powell, the head of the Fed, right, at least for now, he's the head of the Fed, right? Won't be forever, but for now he is, right? Anytime the head of the Fed speaks, the world and the markets do usually listen. How much will it slow down? That is a big known unknown for us tomorrow. But you definitely want to be at your desk tomorrow. If you could only be at your desk for 45 minutes to an hour, I would definitely be there around that PMI composite flash number because, again, PMI, CPI, CMI numbers, any of these numbers, right, they're going to have a big impact on the markets overall. So we're definitely looking forward to that tomorrow in our trade room. Later in the morning, we have the EIA petroleum status report. Honestly, these numbers haven't been that big of a market moving event lately. Well, we've had hurricanes come and go, right? And oil has really been pretty flat here just recently here. Hopefully that number tomorrow at 10:30 will give us a little bit of a late morning rally or collapse or something because you'll see tonight oil was relatively flat going into tonight's video newsletter. So we'll talk more about that, but tomorrow, that is a big news for oil traders tomorrow at 10:30 Eastern time. So 2 big news reports, 9:45 and 10:30, right? The 10:30 report, of course, is really very much a question mark right now. It only affects oil, first of all, and we'll see how much it will actually have an impact on it because, again, we haven't seen much really spur that market around here over the past few weeks. How much will Jerome Powell impact us tomorrow? That is a known unknown we are going to look for tomorrow morning in our trade room. And then again, right, as I mentioned last night, we get some big news coming later on this week. So we'll talk more about that in tomorrow night's newsletter. And don't forget, guys, every morning, Monday through Friday, 8 o'clock Eastern time, we do all this together, right? We're going to trade together tomorrow in the trade room. I'd love to have you there right there with me. What I'll do is I'll put all of the membership links you guys need to get registered and join me every morning in our trade room. I'll put that in the description of this YouTube video. So grab that link in the description. That way you're ready for tomorrow morning. And if you're not on YouTube right now, if you're on the blog here at sidewaysmarkets.com, I'll put a big button for you right below this video tonight on the trading blog. So grab that link, get registered, and come out and trade with us tomorrow in the trade room. We open up at 8 o'clock Eastern time. Now, speaking of tomorrow's trade room, got a lot of great setups we're looking for here as we go into Wednesday's hump day trading session. As you can see, the charts are already got the S&P, got the crude oil, and of course we got the gold on our radar. Now, gold is a big old range right now. Triangle on gold is a big clue, though, that failed rotation. We'll talk about why that's important here tonight, a little bit later on in this video. Over on the oil, we talked a little bit about oil earlier being a bit flat lately. Will tomorrow's inventory report push this thing out of this range? We shall see. But right now, there's that big bearish run lower here. That's one of the biggest clues we have on oil. oil, it's a range on oil, a range on gold. Will be a very similar plans on oil and gold tomorrow, but there are some really, really big differences in these specific entry setups we're going to use. So definitely stay tuned for oil and gold and that. And then, of course, over to the S&P. Boy, did they get that pendulum swing? Did they finish off that? They did finish off that pendulum swing. I'll tell you, it's as close to magic as I think it's about as close to magic as there is in trading, is these pendulum swings. I'm always amazed at how well they work. So open up the S&P here tonight. We'll kick off the video on that. The only thing they didn't accomplish that we talked about in last night's newsletter was to finish off that weekend gap. And from how we finished off the session today, that definitely might be right around the corner. Now, what do we know about the S&P right now? We know that they completed their pendulum swing, right? We had this range we talked about, right, from yesterday. If you watched last night's newsletter, you know what I'm talking about, right? We, of course, marked up the move below the range. We projected that move above the range, and that's what I mean by saying they completed their pendulum swing. We also had that strong, remember that strong move up, right, that finished off yesterday's session, right? Sure enough, if you found that hidden channel, you were ready for that failure into pullback combination, right? So pretty good stuff. If you were, again, if you tuned in last night on the newsletter, you were certainly prepared to capitalize on this S&P here today. So what's going on now, right? How I describe the S&P here today now, I would say we were bullish. I would say by the end of the morning, it looked like the market was sideways, right, into a trading range. Ranges are definitely magnets, right? Don't forget, ranges are balanced, ranges are magnets, and then look at how they finished off the session, right? They trap low, little seller failure, and see ya, they run this thing right back up, right? So real strong move higher. You know, in all honesty, it's almost the same plan that we had in last night's newsletter. The strength of that move, if I kind of scroll forward here, right? The strength of that move, anytime we see this much strength in one direction, that's why I put that little clue on the chart there. Anytime we see this much strength in one direction, what does that do? In my trade room, I call it opens up a loop, right? It leaves, basically, right? It leaves a big open loop up there that will probably be retested, right? So it puts a bullseye right back on those highs. So we know we have this really nice big bull run, right? Nice big momentum push. I'm looking for chances now to try to buy a pullback before we get that retest of the high. And my objective on this will be try to buy at support, right? Find a level of support to get long at. The top of that move will be a target, right? The weekend gap will be a target, right? I'll use the top of the move. The weekend gap will be kind of a cherry on top. And then, of course, that big top from yesterday, 33.26 and a quarter. And if they keep the party going, we've got levels up there at 33.62 and some change overhead. So that's what's going on right now, right? The bulls complete their pendulum swing target, and they completed it on strength. Very, very important. That tells me expect another leg. Let's find a way to buy this thing now using a level of support. So where do we find levels of support on this? Well, there's a couple different options that we have. It's a trending environment for the most part, right? There was a range here, but you'll notice that 1, 2, 3, right? It's difficult to think this range is still that much in play, but it will act as a magnet, and we'll talk about more about that here in a moment. Anytime I have a trending market, I like to use channels. And one of my favorite ways to find channels is to draw them backwards, right? Basically draw these reverse channels. I call them hidden channels, right? So I connect these highs, right? One of the counterintuitive ways of using a channel is if you want to find a support level, right? If you want to find a support level to buy, one of the easiest ways to find, it's kind of funny, but one of the easiest ways to find a support level is to actually draw a resistance trend line first, and then take that trend line and look for a good fit at the bottom. You can see get a pretty good fit right at that bottom. So that's definitely going to be an area I'm looking to be a buyer on. The next thing here is you'll notice, right, we go up, we pull back, we go up, pull back, up, pull back, up, pull back. That whole area right there, that whole whole area right there is what we call a reversal line. What is that at? 86, 86 half up there. So that area is a really attractive area as well. So you can see this spot right there, 86.5, the low of that range, the low of that channel, right? And then again, that trading range, right, acts like a magnet. So I would anticipate, hopefully they'll pull back into the range, that strong move higher, and hopefully we can get that thing to pop right back up to retest those highs. So let's talk details on this, right? What would be some setups that I could look for on this? Now, the one thing we know for sure is this is a lot of strength, right? When there's a lot of strength on the chart, we might not get a very deep pullback. So I have to be prepared for a shallow pullback. And that's why I have that low marked up right there at 89. We'll call it 89 3/4, right? Give or take a few pennies there, right? The bottom line though is I do want to be aware that we may get a shallow pullback here. And if we do get a shallow pullback just below that low, again, what I really hope we get is if they called me and said, "Hey Joe, what do you want tomorrow, man?" What I would say is I want a nice deep pullback, get me down around this range, get me down to support. Then I want to see the bears come over. I want to see them try to get short off the moving average. Once I see those bears try to get short, it'll look like this, right? It'll pull back, the bears will get short, and then once I see those bears get short, then we know where their stops are. We can buy into stops, and we can buy a pullback, right? So think about this little section right here, right? Think about this little guy right there, right? We pull back, the bears try to get short, buyers buy into their stop losses, it snaps up, pulls back, and goes. We call these failure into pullback combinations. They're very, very common, right? Failure into pullback combination. Failure into pullback combination. Failure, see where I'm going with this, right? Failure, got it. Failure into pullback combination, right? That would be my kind of dream come true, right? And you're buying into stop losses, you're buying pullbacks. Where's my objective? Where's my target? Target's back up, right, to retest that high, right? Failure into pullback combination. Look for those bears to sell short off the moving average, buy into their stop losses, and buy the pullback. Now, that's what I really hope we get. What if we don't, right? What if all we get is a shallow pullback? You know what I mean? Because we have support down here, and because it's a strong move higher, what can we do to avoid buying too high? Because, right, that's the problem, right? If I get too aggressive on a shallow pullback, it's going to kick back against me. So what's the best way to buy if I don't get that kind of deep pullback? My favorite pattern to avoid buying high is always a trap, right? So a trap pattern, what I want to see is I want to see bears try once, I want to see bears try twice. What I'm looking for here is and again, this is just for a shallow pullback, right? For a shallow pullback, what I'll do is, knowing that the range is a magnet, knowing that I don't have a great risk-reward ratio on a shallow pullback, I'm looking for a trap entry. What will have to happen on that is you'll have to wait for the bears, try once, probably try twice, right? And look for that trap entry below that low. Now, I'll tell you, trap patterns, failure patterns, pullback patterns, these are some of my favorites, and they work on pretty much every liquid market as long as you're using them in the correct way. Now, we talk a lot about these patterns in our free trading classes here at School of Trade. If you haven't done so already, make sure you grab that link that just popped up there in the upper right-hand corner. Grab that link, get registered as a member of our free trading courses. We get a lot of premium courses, but our free trading course will give you a nice deep dive into all my favorite entry patterns, my 3-step strategy, and most importantly, I'll send you hundreds of examples of how we apply that strategy to our favorite futures markets. Again, pause the video if you need to. It's worth digging in. Get that registered for that free trading course and learn the same stuff we use every morning in our trade room. And again, as I mentioned before, I'll put all of these important links for you too in the description of this YouTube video or right below the video tonight on the trading blog. All right, so those are some ideas here we're looking for, right, on that deep pullback, right, or on that shallow pullback. Now, what if the market doesn't pull back at all? What if it keeps on running higher here? What do we do in that situation? Well, if it keeps on running higher, now this becomes a spike and channel. right, now becomes a spike and channel. Now, what do we know about spike and channel patterns? Spike and channel patterns are notorious for nice deep pullbacks. You want to mark up those lows and look for your entries around those lows. Now, what do you think my favorite entry will be down around those lows? I'll give you a hint, right? We just talked about it. Failure into pullback combination, right? So wait for that deep. Again, if it keeps on going higher, that doesn't give me a license to chase after this sucker, right? I'm still looking to buy low. I still want to buy at support. What I'll also do is, if the market is to jump higher here, right? If we're going to go higher here again, what I'll probably do is try to connect that high, connect that low, right? Find this, you know what I mean? Find this hidden channel, mark up that low, and then look for that pullback, again, failure, right? Into pullback combination as we go back up to retest the high, right? So if they, again, this is not if they pull back now, but if they keep on going higher, right? I'll adjust up that new hidden channel, look for those failure, pullback combinations. And again, you'll get a much deeper dive into that combination setup in the free course that I mentioned earlier. Now, at the same time, we got that higher high up there, that weekend gap, right? So keep in mind, if for some reason the market keeps on going higher here and we start going sideways up here, right? We got my boy Powell tomorrow at 10 o'clock, right? So for all I know, we'll end up going sideways on the chart tomorrow. We talked about this last night, right? But again, what's my favorite entry pattern if the market runs sideways? If it runs sideways, what do? We focus on failures. We wait for price because we're bullish, right? Because we're bullish here. We wait for price to get below the range. We wait for bears to take it lower. Usually profit taking takes it lower. We wait for sellers to come in and try to get short off the pullback. Oh, those poor bears, right? Momentum is bullish. We'll buy right into those stop losses, right? So if it does go sideways up there, keep your eyes open for those seller failure patterns just below the low of that trading range. And obviously tomorrow morning in the trade room, we'll do it together, right? We'll make sure if I happen to miss anything, we'll make sure we fill in those blanks here. Now, last but not least, how do I sell this market right now? Well, first of all, there's way too much momentum right here to call a top in this market. We may be at the pendulum swing. I'll give you that, right? I will definitely give you that. We are at what could be a major turning point. But I'll tell you right now, the way this market closed today's session, I'm definitely not in the mood to be calling a top, right, on this market. What may happen is we may see a top form. The market may pull back, but I don't want to sell it as it goes lower because it may just snap right back up to retest those highs. There are two scenarios I'm looking for right now to get short on the S&P. One of them, in my favorite, is that 1, 2, 3 reversal pattern. I'm not in the business of calling tops in a strong bull market right now. So I want to see a strong move down. I want to see a pullback to the moving average. But instead of those sellers failing and buying into those failures, now those sellers will hold the pullback and they'll jump. Right? I call this a 1, 2, 3 reversal. 1, 2, 3 reversal pattern. Right? These come in lots of shapes and sizes. Right? But this one, I want to see a nice strong move down. They got to hold that pullback and not just hold it. They have to show me a real strong jump off the moving average. Once they get that 1, 2, 3 move, now mark up that low, mark up that high, right? 1, 2, 3, mark up that high, and we look for the short off the high of that hidden channel. I know, it's always very frustrating to watch it go without you, but remember, trading is all about probabilities, right? We don't want to take the trades that are low probability, right? Good for them. If they do make it work, good, right? But it doesn't fit inside of my plan, and so I'll skip that one, right? I'll wait for that follow-up trade because at that point now, momentum has confirmed. There'll also be a whole lot of FOMO in the market at that point. Now, where would the sellers be trying to go, right? If the bears take control of this, where would they be trying to go? They'll be trying to go back down to those lows, right, from yesterday, right? So if the bears can take this 1, 2, 3 and make that run going lower here, yeah, you know exactly where they're, right, what their goals are now. They're trying to go back to that range, right, that kind of finished up the session yesterday, 32.30, right, 32.17, right, being that low. Another pattern I'm watching for right now, another setup would be if we run back into the range and get stuck in here for a while, right? Remember, ranges act like a magnet. So if for some reason this thing turns around, takes a nosedive, and just kind of sits there and goes sideways for a while, this will now be a bear market into a trading range. Now remember, it's got to sit there for a while. I would say at least an hour or so inside of that trading range. Then the range reignites, right, its magnetic field. And now what do we do in a bear market? Right, into a trading range? We sell above the high using what? Using a buyer failure pattern, right? Wait for that pop up, wait for buyers to try to buy the pullback and sell right into those stop losses. Ranges are magnets. If we do get dragged back into that range, we'll sell above the high. We can also buy above the low for that matter, right? If it does go into that range, I can also wait for the move lower. I can buy below that range by using pretty much the same exact pattern here, right? So buy low, sell high, focus on failures. We'll talk a lot more about failures on the next chart here for oil. But so far so good, right? Pretty simple strategy here on the S&P. The buyers have control. They've got their they get a real strong move going higher. Do we see a shallow pullback? Do we see a deep pullback? That will determine which of the entry patterns I want to use for tomorrow. All right, we're looking good here. So S&P, we got your number for tomorrow. How about some oil? Now, of course, oil has been a very interesting market lately, right? It's been a bit flat. You can see, right, flat, kind of a flat session here today. As I mentioned last night on the newsletter, what makes oil so really interesting right now is the fact that we have a hurricane right now bearing down on the, I believe, the southeast coast of Texas right now, right? So southeast portion of the U.S., right? We got one hurricane down there right now. There's another one brewing somewhere up north right now. They're expecting that to make its way down. So you would never know it by looking at this oil price right now. You would never know this was a hurricane, right? Or a hurricane was building right now, just because this oil market just simply never does this. And this definitely tells us we are swimming in oil right now, right? There has to be a ton of oil supply out there, plenty of oil, because obviously nobody cares about these hurricanes. And that's why I mentioned earlier, because we have news tomorrow at 10:30 Eastern time every Wednesday. We have the weekly petroleum status report, the inventory report. The fact that we have that news report tomorrow, we might not get that much of a reaction to it, just because there's just so much supply out there. It's just tough to imagine a big enough number tomorrow to really kick this thing right into gear here. So it's a range bound market right now on oil, right? It's kind of a super range really, because there's a lot of fundamentals right now that say this should not be as sticky inside this range area. So very much a range bound market. What is a range? A range is a balanced area, right? Range bound markets are balanced. What I always say in my trade room is trends are on a mission to get somewhere, right? Usually it's a retest of a higher low, it's a channel rotation, it's a measured move. Trends are trying to get somewhere, right? Like the S&P. The S&P is trying to finish off that weekend gap. They're trying to retest that high. But what are ranges, right? Ranges are happy right where they are, right? That's what makes them a range. Ranges are balanced, right? So trends are trying to get somewhere, whereas ranges, they're content right where they are. If they weren't, they wouldn't be a range. And so that's the mentality I try to remember whenever I have a range-bound market, right? They're happy right where they are, right? And for whatever reason, they're happy at 39.75, right? 39.80 is kind of that trading range environment. So if a range-bound market is, let's say, happy, if you will, right? If a range-bound market is content at this price, right? This is where the buyers and sellers agree on value, as they say, right? In market profile or value or auction profile theory, whatever you want to call it these days. But the bottom line is, right? We know that the value of this market, right, is right around that 39.71, right? So unless something drastic happens, right, all things equal, and that means unless we get some news event that spooks the market, unless we get a political announcement that spooks the market, unless we get some sort of natural disaster, right, like a hurricane or an earthquake or something that again spooks the market enough to think that supply or demand will fall out of whack, that's when these ranges will get broken out. But unless we have some big catalyst, What goes up will usually come right back down. What goes down will come right back up, right? So ranges act like magnets, right? Because, again, the buyers and sellers, for whatever reason, right, and I won't bore you with the details, they agree. This is the right price on oil, right? The market's always right. You know, that's why a lot of traders will tell you, right, the market is always right. The buyers and sellers, this is where they stopped, right, trading here for today. So pending any, sensational updates here overnight, what goes up will likely come down. What goes down, right, will likely come right back up. Now, with that said, there is one very big clue on this chart, and that is, well, there's actually two big clues. One of them, if you look left, right, is that big move down. Now, remind me, guys, the last time, well, we just talked about this in the S&P, right? What does a strong move in one direction tell us? It tells us there's a big bullseye right on that low. Right? It basically tells us that unless these buyers can hold and run, right? What is that called? 1, 2, 3 reversal pattern, right? We talked about that before on the S&P. Unless these buyers can hold this and run, there's a big bullseye right on that low, So right off the bat, we know just basically from yesterday's information that selling, trying to sell high, trying to be a seller on this down to that 38.87 is going to be the more reliable side. That doesn't mean we can't be a buyer on this. It just means we've got to be a little more careful if we want to be a buyer. And we'll talk about that here in a moment. What I think is the more important clue, though, is this strong move lower. Because anytime we see a very strong move in one direction, what do we know? We know we're going to probably see a retest of that low. And so when you combine both of these clues, you know we get that strong move down. They're begging for a retest. We got that 87 low, right? That's begging for a retest. So I definitely want to be more aggressive to the downside. I definitely want to be a seller, right? And if I want to be a buyer, I've got to be pretty careful, right? Be pretty careful. So how exactly could I sell this market right now? There are really there's only two basic ways to get short on this. One is to find resistance areas overhead. And you'll notice I've kind of marked those areas up. And then what I'll do is I look for a price to break out. I wait for buyers to try to buy the pullback, right? And we look to sell into those stop losses. So basically what we do is we focus on failures. In this case, a bear market. So we focus on buyer failures to get short above the top of that trading range. The most important thing, though, is that you want to, A, incorporate resistance above the range, and B, stay out of the middle of the range, right? That's one of the most important. It's not always easy, right? It isn't always easy. You know, sometimes the market will run up, it'll pull back, it'll be very tempting to sell short, but you don't want to do it right in the middle of that trading range. If that happens, what will usually happen is you'll usually end up getting traps, right? You'll get traps because nobody wants to sell inside of that range, right? So if we do get a small little pullback like that, right, look for traps to avoid selling too close. Ideally, though, I want to get up inside these resistance areas, right? I want to get up inside resistance. I want to look for, right, those buyers trying to get long. Now I know where their pain is. Now I know where their stops are, and I can sell right into those stop losses. We call those buyer failure patterns, right? And again, since we're bearish overall, I can definitely be aggressive on those buyer failure patterns to sell off the high. Next up, right, stay away from the middle. So if we sit here quietly, stay away from that middle. Now, how do we sell it as it's going lower? This is where we have to kind of thread the needle, if you will, right? Because remember, the bears are trying to get here and the bears are trying to get here, right? They're trying to get to 19, but more importantly though, right, they want to get to that 87, right? 38, 87. So what would be maybe not easy, what would be the most effective way for me to get short as the market's going lower? Because I can't do it now, right? I can't just guess and trade short right here. I mean, I wish it was that easy, but it's not, right? I have to wait for some momentum. But as we go lower, though, I'm very concerned about selling too low. Now, remember that. I talked about this earlier. There was one pattern in the S&P on the shallow pullback. What's the best pattern to avoid buying high or selling low, right? Because that's not what we want to do, right? We want to sell high and buy low. So if the market runs lower, which I need to get some momentum, I need to see some move going lower here. Unfortunately, it's not a reliable way just to sell it right now. What I want to do though is I want to wait for a trap. Right? Traps are the go-to entry pattern as the market goes lower. Why? Because that's going to allow me to avoid the big problem, right? The big problem is I want to sell low. So how do you sell high? You sell high by using a trap high, right? A bull trap, if you will, on this one. And what I'll do is I'll look for this classic pattern. It's called a two-try trap pattern. Strong move down, shallow pullback to the moving average. That's usually the giveaway, followed by that lower low in price. Strong move down, shallow pullback, lower low in price, trap high. Target, back down to retest those lows. And if the bottom really falls out of it tomorrow, oh, hold on, keep it going. 30, basically 37, right? 37. So this thing really collapses. You know what I mean? Let's say we go strong move down, we pull back to the moving average, and this sucker runs. You know, again, we got some big news tomorrow. It doesn't seem likely, but anything's possible, right? It doesn't seem likely, but it's certainly possible. If we get that 1, 2, 3 breakout, 1, 2, 3 breakdown, I can mark up that low, I can mark up that high, and I can sell that first test off the high of that hidden channel, right? First test is always the best test. So I guess I said 2, that's probably 3, right? That's 3 or 4 really, right? So again, right, deep pullback, 1, 2, 2 try failure, shallow pullback, right? There's the trap, right? Remember, you don't want to sell too close to the range. We go lower, strong move down, shallow pullback, lower low. And then what do? Trap high, right? Perfect, right? Trap high there. Or it's that 1, 2, 3 run, mark that low, mark that high. First test is the best test off the high of that hidden channel. 4, right? Pretty darn reliable entry patterns. Now all we need to do is wait to see what we get. Now, how about being a buyer on this? Can I buy this market? I definitely can, but I got to be careful though, right? First of all, if we go lower, right? Remember, what are ranges? Ranges are magnets, which means I want to go back up into that range here. The problem is we've got bear bias here, bear bias there. So if the price gets down into my support areas, remember you want to buy at support below the range, sell at resistance above the range. If I get down into my support areas, what would be the safest way for me to go against this momentum while still looking for a failure pattern, right? Because failures are our go-to entries in range-bound markets. What's the best failure pattern to look for? Here's a kicker: when you're going against momentum, or when you have concerns about momentum. They're called nested failure patterns. And basically what I'll do is, instead of getting aggressive and buying into the stops of these sellers here, what I'll do is I'll give them 2 tries. Let them try once, let them try twice. What this does is this allows all the bears to kind of get it out of their system, right? Let them basically empty the clip, if you will, right, into this market. Once I have those bears trying once, trying twice, usually that means all the bears are all dried up now, right? Now the only one left to trade are the buyers, right? That's the goal here. The goal is I want to let the aggressive bears get in, right? The conservative bears a little bit higher up. Once those conservative bears get in, yeah, now I got them right where I want them, and now I can buy right into those stop losses. Okay, now what I'll usually do on this is I'll draw a trend line right across that low. Draw that trend line, right? I can buy off the trend line. I can buy into stops. Another variation of this would be if we went a little bit sharper, right? One up like that, right? You can't draw the trend line like that, right? It's not going to work very well. In that situation, that'd be a variation. In those situations, again, wait for 2, buy low. What's the best way to avoid buying high? Trap, right? Trap, trap, trap. You can see how we keep applying the same basic principles, right? So again, if it goes lower here, right? 1 try, 2 try. If that trend line is nice and flat like that, that's a great trade. Probably my favorite counter trend trade, right? Something like that. But if we V bottom on it and come right back up like that, right? Again, think about it. You can't do that and still buy low, you're buying very high up there, right? Does that make sense? Is that a light bulb moment? How about a hashtag light bulb moment there in the comments section for me here tonight? Let me know you're still listening out there, and hope by now I've earned a couple thumbs up here, maybe a subscribe to the YouTube channel. But I hope you can see this though, right? Does that make sense, right? That pattern right there is really aggressive because a lot of times it'll kick back against you. Buyers are going to wait for that trap. That's the entry you want. Again, I can buy it. I just got to absorb those sellers. Let them dig their own grave and try to play it buying as low as you can. Hashtag light bulb moment, right? Down in the comment section below. And then obviously we got that 1, 2, 3 breakout going higher, right? 1, 2, 3 breakout going higher here, right? 1, 2, 3. Remember, not enough to get a strong move. Strong move there, strong move there. Didn't do anything. I can't guarantee a strong move will hold, but if they do hold that 1, 2, 3 move, now we're on. Mark up that low, mark up the high, mark up that low. That will find that hidden channel, and we're buying the low of that hidden channel. Where are our targets up here? Target's pretty easy. It's back around the highs of this week, right? 41.46, basically 41.60, around those highs there for that big move going higher. Tomorrow, what are we going to get? It's a range-bound market. Buy low, sell high, but be careful trying to be a buyer tomorrow because you got a lot of momentum on the side of the sellers. All right, we're looking pretty good here. How about some gold? I saved the best for last. I definitely saved, well, they're all pretty good tonight. I think all of them have some pretty darn good clues here for us. So what do we know about gold? Well, let's back things out a little bit here. Remember, first of all, that big bear move down, right, from yesterday. So what does that mean, right? That means the big bullseye right on that low at 1885.5. Okay, remember that. Big bullseye at 1885.5. Now, what else do we see here right now? We have a triangle. Now, triangles are really great patterns because they usually give you really big clues. And there's a big clue on this triangle. Whenever I have, well, not just ranges, but everything, one of the keys, and you'll learn this in our intermediate classes, right? Our video classes. We have beginner classes, intermediate classes, and advanced courses here at School of Trade. But in the intermediate section, you're going to start to learn how to draw these ranges. And one of the most important things to a range and a channel is rotation, right? What that basically means is it has to make sense. So you notice the mark goes down, it goes up, it goes down, right? We really, in all reality, should be completing that rotation, right? They should be rotating back to the high of that. In this case, it's a triangle. It's basically a range, right? So you can probably guess, if we don't have rotation here, is that a bullish clue or a bearish clue? What do you think? It looks to me like a bearish clue to me, right? So very strong bear clue, because after all, the buyers, they should be able to get that rotation, right? If they're unable to get that rotation back and forth here right now, what does that tell us about this market right now? It tells us the bears, for whatever reason, and I'm not trying to say I know why. I don't care about the why. The why is irrelevant, right? Knowing the why only helps impress my buddies. You know what I mean? My friends who know nothing about trading, right? Show them some cool indicators, right? Talk about why the market's moved today. It's irrelevant. It's not going to help me make money. It's just again, it's fluff, right? It's like going to some news website and they say the markets went down today because of this, and the like. The why doesn't matter, and neither does the why. The why is probably not correct either, right? So the why is not an issue. What we know is they're failing to retest that high, and it looks to me like we have basically a bear market into a little tiny range here, right? So that appears to me to be another very big clue, right? We might go sideways here inside this range here for a while. Now, remember this part, because this is the most actionable part of the entire lesson here, right? We talked about this last night. Whenever we have a bear market into a trading range, what's the strategy? What were there are three basic patterns, right? We look for with a bear market into a range. What were they again? One was a buyer failure, right, above it, wait for the price to pop up. wait for these buyers, try to buy the pullback, right, and sell into those stop losses. That's a pretty easy pattern to learn, right, and understand. The key here is, again, look for resistance. Remember that? Look for resistance above the range. Look for the buyers to try twice and sell into their stops, right, above the range, right, not inside the range. What were the other two? The other two are breakout patterns, right? So strong move down, pull back to the moving average, strong move off. What do we call those? We call those 1, 2, 3 breakouts, right? Mark the low, mark the high, selling off the high. Remember that from earlier on in the week, right? We call that 1, 2, 3 breakout pattern. We don't trade the first pullback because, again, it's a range, right? The range will act as a magnet. What was the third one? The third one's that 2-try breakout. Strong move down. This one requires a very strong move down. The strong move down, you'll see a shallow pullback, that lower low in price, and we're looking for that trap, right, above that high. That's the third. These are my 3 favorite patterns when I have a bear market into a trading range. All right, grab your screenshots, 1, 2, 3, grab your screenshots, and now go back to the chart now, right? Now, there's my range right here. Here's my range right here, right? Now, where can I sell above the range? I have to find some resistance, right? I got my resistance. All I need now is to get up, get up, get buyers to try to buy the pullback, right? And I can sell into those stop losses. Okay, what I don't want to do with, this is where things a bit tricky here is I really got to be careful on this getting in the middle, right? The middle is going to be a bit, well, it's going to be grindy. It's not going to be very consistent here. I want to get up above those highs, right? Get up around the top of that, again, of the triangle, an area of resistance. Let those buyers come over. Let them try to get long here, and you got them right where you want them at that point, right? The range acts as a magnet. We have an overall bearish bias. That's going to be a great setup tomorrow. Hopefully we get it. The other pattern, right? The other pattern now will be we have to get through this area right there. Okay, one thing about a triangle is the edges of the triangle are always going to be the ones you got to be careful about. You got to break down those edges. We have to blow through that edge right there. Okay, that's going to be a challenge, right? Got to be some strength here. Now, the biggest problem is we don't want to go too far because the actual low, right, is down at that 1885 and then another big level, 1874.2. So, 2 patterns I'm watching for, and we just talked about them, would be that strong move down, that pullback to the moving average, that strong jump off. And what I want to do is I want to make sure I get into this sucker before we get down to that 1885. So this is where a little bit of discretion will come in. And we'll do this together tomorrow morning in the trade room. But that 1885, right, 1885 level, I want to make sure I'm getting that short off the top of that hidden channel before we get there. The other pattern would be that strong move down, that pullback to the moving average, that, shallow pullback, that lower low. The shallow pullback is what gives it away. Strong move, shallow pullback, lower low in price, trap high, again, target 1885. If for some reason the market takes off the downside, it may also, again, with that 85.5 down there, we may end up getting a range down. You know, with Powell tomorrow at 10 o'clock, it wouldn't surprise me if the market tumbles down and then goes into a range down here, right? So, you know, don't be totally shocked if it tumbles lower into a range. What do we do in that situation? We sell above the top of the range using buyer failure patterns. All right, we're looking pretty good now, right? Now, the last thing we're worried about here, or the last kind of plan on this, is how do we buy this market? Can I buy this market? You definitely can, but I've got to look for a very specific entry pattern. For example, because I know the bears have so much momentum right now, and with that failed rotation, if we go lower, I'm looking for that, what was it called again? That nested, remember that, right? That 1 try for the bears, that 2 try for the bears. Remember how important that trend line was? If the trend line is really flat, I can buy it pretty aggressively. If that trend line is really steep, what's the problem? Too high, right? Too high. Look for that trap. But the bottom line is I want to get those bears trying twice. Let them try twice and then hit them where it hurts, right? Trade right into those stop losses as we go. Nested failures down around these edges. Bears try once, bears try twice. There will be again, there's a lot of attention to be paid, though, to the condition of that entry pattern, right? How that entry pattern sets up will determine what type of entry signal we're going to use. And then last but not least would be that strong move up, that pullback to the moving average, and that jump. Remember, a strong move higher is not a guaranteed reversal. Okay, we see this time and time again. So don't be foolish. Don't be trying to buy. Remember, I realize even a broken clock is right twice a day, right? It is. So yes, you will see those patterns work, right? You'll see a strong move up. The problem is it's a range, right? This is not a trending market. This is not the S&P we're talking about right now, right? This is a range-bound market. It's a magnet back around that 1910, right? Wait for them to hold. Wait for that run. Find that high. Find that low. Mark it up, right? And then get aggressive. Okay, you have my permission to get real aggressive off the low of that hidden channel, right? But not on the first pullback. Where's our big target? I'll tell you, if the buyers get their hooks into this sucker, there is a ton of wide open space. I almost hope we end up getting the buy side tomorrow just because you got all of this good stuff, right? You know, think about it. There's a lot of wide open space above us. There's not as much below us. That doesn't mean they can't do it, right? It just means I wouldn't mind at all. I wouldn't argue at all if those buyers took control. All right, guys. Boy, we covered a lot in this video. I hope by now you subscribed. I hope by now you hit that thumbs up button. I hope you also had that same hashtag light bulb moment in the comment section below. Please don't be afraid to share this video with a friend here tonight as well. But whatever you do, don't miss tomorrow morning's trading session. I'll put all the membership information you guys need in the description of this YouTube video. So grab that and get registered. Please don't be afraid to call the office tonight. I'll be here to answer the call and help you get started for tomorrow. And if the telephone isn't quite a good fit for you, I completely understand. We have live support on the right-hand side. I got live support on the left-hand side. There's a lot of places you can initiate chat with us here at our corporate headquarters in Los Angeles. But that's it for me, guys. Hope you loved the video tonight. Hope you'll share it with a friend. Hope you guys will type your questions in the comment section below. I look forward to seeing you guys tomorrow morning at 8 o'clock in the trade room. If not, we'll do it again tomorrow night for a Wednesday edition of our nightly newsletter. My name is Joseph. Be well out there, will ya? Be nice to each other, huh? And be here next time. Adios, amigos. Bye-bye for now.